We'll give it another 30 seconds or so before we properly get started. Normally it takes a couple minutes for people to filter in. As we go, if you want to type in a hello into the chat, just make sure your setting is on to all panelists and attendees, and just maybe share who you are, where you're coming from, and if there's a specific thing you're hoping to get out of this, then let us know. Try and make sure we get to that. Great. And Aislinn, if you wouldn't mind starting the recording and go live. And welcome everyone to the June 23rd edition of QT Chats. If you're joining from Facebook Live or YouTube and you want to get into the next one, or indeed this one, if you're in time, then please go to our homepage and click on the convenient link on the homepage, and you can register and get in right away. Make sure and get your question answered. We're going to be talking about forecasting today, which I'm sure is no surprise to all of you because that's what you sign up for. We'll cover off the news like we always do, and then we'll get into the forecasting topic, and we're going to be talking about what's the current state, so basically how forecasting has been traditionally done, and maybe some different approaches to that. We'll work through an example of creating a forecast, and we're also going to talk about that final critical step, which is often ignored, which is presenting a forecast. This is intended to be an interactive sort of session, so please do jump in with your questions as we go. Zoom's got a lot of ways that we can do that. So in the chat, you can always type in a question. Just make sure that your setting is your chat setting is to all panelists and attendees. That way everyone can see what your question is. Some people can also jump in as we're going. There's a Q&A feature, so you can type something in there, and we'll get to that when we can. But also, we always encourage people to come on mic and ask and interact directly. You can have a rich interaction that way. So please raise your hand or type into the chat if you want to come on mic, and then we'll just unmute you and you can state your question from there. Introductions. We're so pleased to have some wonderful people with us today. Our guests from Jirav and Helena, all really experts in accounting, finance, forecasting, and all that kind of great stuff. So why don't you take it away and first of all introduce yourself, Helena.
Hi everyone, I'm Helena Patience, the CEO for Entreflow. I've been here about 4.5 years. I'm a CPA CMA, love all things nerdy in the finance, budgeting and forecasting and KPI realm, eat it for breakfast. So I'm delighted to be here and to nerd it up with our mates at Jirav today. So thank you. I'll pass it over to you. Evan, do you want to introduce yourself?
Sure. Thanks, Helena. Thanks everybody for joining today and taking the time out to further our knowledge on this specific topic. My background is a little bit of a traditional accounting path. I started at one of the big four accounting firms in San Jose, California, auditing a host of publicly traded companies as well as some private companies for a number of years. I then joined a corporate medical device manufacturer all the way from basically 5 million in revenue through 125 million in revenue worldwide, and was fortunate to participate in a whole host of things relating to operations and things. From there, I left and helped raise money for startups and got into the startup game. So I've been into this world now for, I want to say, 6 or 7 years, and excited to share my experiences with everybody and hope you guys get something good out of it.
And lastly, I am Blake Oliver. I'm a CPA. I also work at Jirav. I do marketing, but as I said, I'm a CPA, and I come from a public accounting background. So I worked at a large accounting firm, largest firm in California called Armanino before I jumped into software. I've been doing product marketing for a few years now. I got my start, though, in online bookkeeping. I was the second bookkeeper to get certified in Xero in the United States. And wow. So I basically had no idea what I was getting myself into when I did that. I had found a good thing early on, and I started a company where we set people up on Xero. We did bookkeeping, we did bill pay, payroll, full outsourced accounting, and we worked with a lot of startups. And I had a lot of fun building that business, and was able to actually sell that business and make a little bit of money. So that was my kind of like experience with entrepreneurship, gave me the bug for that. And so then going from accounting into the world of startups, myself was not too big a leap because I already got addicted to it. So yeah, that's my background. Happy to be here.
Sounds good. Thank you very much for being on. I'm Ian Rogers. My name's up there too. I don't know as much about forecasting as all these fellas, but I do have an MBA, and I've created a whole bunch of spreadsheet-based forecasts in my life, and have started using Jirav and done a few models in there. So I'll contribute what I can. I'll introduce our firm as well. So we're a consulting firm that works with startups and high growth companies, particularly in Canada. We offer accounting and CFO services and all the traditional things that a public practice accounting firm does. We also focus quite a lot on systems and tech. We do HR consulting as well, and marketing for early stage companies to get their strategy going. So that's kind of what we do. If you have questions about these things, by all means, ask away and we'll try and answer. Also, I should mention that QT Chats is co-presented by Startup Vancouver, and by extension, Startup Canada, and we're really grateful to have their support. Colin couldn't be with us on this call today because he's actually pitching. He's participating in a pitch competition for his startup, and we wish him all the best of luck. But please do follow Startup Vancouver on their social medias. They've got lots of great events and resources for the community. They're sort of like the glue that binds the community together here. So check them out if you haven't already. All right, I'll run through the news, and it should be pretty quick because there's not much going on. But the new head of the Bank of Canada gave a speech, and the link is there. I'll post that in the chat in a second. But he was talking about how there's been deflation over the last little bit, but also sort of a change in the way the basket of goods is defined. That gets nerdy and technical into economics pretty quickly, but it's interesting to see that deflation is happening. Haven't seen that in quite a while in Canada. He also said that interest rates will hold steady, so no changes expected, and that's nice to see as well. Also, we've had
pretty much a good time to buy a house then.
Yeah, that's what I was just thinking, Helena.
It's a good time to buy a house. Good time to get some debt onto your books as well, right? Business loans, very very
line
good.
Of credit increases.
Line of credit, all that kind of stuff, right? So those things might picture into your forecasts. Nudge, nudge, wink, wink. And the next piece is work refusals. So if you rewind time a few weeks back, we did a previous QT chats about the return to the workplace and safety concerns. And this was our prediction that we would see a whole bunch of people trigger their right to refuse unsafe work conditions and refuse to come back to work. So that has been happening. And so go back, if you haven't seen that one, go back, rewatch it, figure out how you can avoid this kind of thing happening to your business. All right, that's what's happened in the news. In the positive news, I'm highlighting a couple things here. So one is a local funder called Merchant Growth, and they've got new funding available at favorable rates, specifically for people making retooling for their COVID-related or impacted pivots. So check them out. They've got an interesting program going on. And another sort of feel-good one is Simply Beautiful. They're a local Canadian company that does um, uh, what do you call it? It's not cosmetics, but something in that space. Personal products, basically. And they're sort of treat yourself and treat a healthcare worker. They're still working hard to keep us all safe and healthy. And that's nice that they're doing a buy one, give one kind of approach there. So the link to the article is there. We'll post that afterwards as well. So that's a cool one too. Did anyone else come across any sort of good feeling, good news stories over the course of the week?
To the panelists, you're asking, yeah?
Yeah, anyone really.
Or anyone.
Well, if you come up with something, type it into the chat. We always like hearing good news.
Yeah. There's enough not so good news out there.
Yeah, exactly.
Well, yeah.
All right. So we'll turn it over to forecasting in 2020. And I'll let Helena introduce the why are we talking about this at all kind of conversation. Go ahead, Helena.
Thanks a million. Right. So most people know that they need to have a budget in place to have a sense of, where they're trying to get to for the year, what their goals are. People tend to get a little bit foggy on what the difference is between a budget and a forecast, and why they might also need to forecast if they're already budgeting. So I think it's important just to call out that a budget is really looking at it's really tied to your vision, your goal for the year, where you're trying to hit this year, and then should take into account like what needs to happen over the course of the year in order for you to get there. I always say you want to look at your budget to actuals on a monthly basis so you can see how you're tracking towards that budget. And unless you have anything crazy happening in that year, like, I don't know, a pandemic or something like that, your budget should be pretty rock solid. You don't generally have to do rebudgeting throughout the year unless there's something big happening. And then essentially what we do is we fall back onto our forecast on a monthly basis, which is looking at where we're actually heading, okay, and our prediction of where we're going to head based on where we're heading now. So having those two structures in place is really helpful for short-term focus and long-term focus, as well as having that, keeping in mind, where are we actually heading versus where do we want to be heading, okay? So they're both in their own right equally important. Both something that I think takes a little bit of time to set up. And once you get it set up, it should be pretty easy to maintain on a regular basis, but it gives you invaluable information, especially when things don't go as planned, to be able to figure out how to improve and where to focus your efforts. And especially in a time like we're in right now, where a lot of people are having to
Oh, Helena, your mic seems to have cut out.
Okay, so it's not just me.
No. Yeah, I can't hear you. Maybe you can adjust your settings or rejoin. That would be great. But you were on a good roll there. Evan, do you want to jump in with any other sort of reasons why you want to do this? Yeah.
Yeah, so depending on what type of budget you've developed, it's sort of like a spending plan. It's like you budget so much for groceries a month. As a business, you're going to budget so much for rent or internet costs or developers or what have you. And this is money that some of these things you're just going to have to spend. What a forecast is going to allow you to do is look into the marketplace and say, kind of like a stock trader would, are we in a V recovery? Are we in a W recovery? Are we in a Nike swoosh recovery? And then you can build forecasts around these type of different recovery scenarios, so that when your predictions start to become true, similar to Ian, how you just had pointed out previously in the news update about the work, I forget what it's called, but it's a Canadian term, I think, the work thing, predicting that
work refusal. Yeah.
Work refusal, right? So that when those things become reality based on your, based on your understanding of the economy and what you think is going to happen, you're set to pounce on the opportunity, really. I mean, that's really what we're looking for here as business leaders, is we're looking for opportunities in the marketplace to take calculated risks. And so in order to understand what your calculated risks are, you need to game out different scenarios into the future. What if I'm going to dare say it. What if Donald Trump gets elected again? What happens, but that would be a forecast scenario. You wouldn't want to budget to that because you wouldn't be able to hold accountability to that sort of reality. Though it's definitely something you should be prepared for as business leaders. I mean, if you're responsible for shareholder value creation, you're going to need to be able to answer to how you respond to these things. Helena, did you get your mic back? It's still no.
Well,
Still no.
I wanted to follow up on Evan's point about Trump getting reelected, because I don't imagine that the Canadian audience here is all that. There aren't too many fans of Donald Trump, I imagine. So I'm not going to annoy anyone here, but there was some really good news. If you aren't a Donald Trump fan, the fact that he was only able to get 6,200 attendees in a stadium that filled 19,000, if that's a barometer for his support among his base, then we are in for a very good November.
Can you guys hear me now?
We do.
Yeah, you're back. That's great.
Sorry, my Zoom does this thing where it thinks there's a loop and tries to mute me. So I've played around. Okay, thank you for jumping in there, guys. Look, see,
yeah, of course,
experts on the panel. They can just jump in there and take over. Technical problems.
Happy to help.
Okay, cool. Should we go to the next slide then?
Yeah, for sure. I wanted to make one last point on this, and it's just the speed of reaction. So some founders or CEOs that I talk to loathe the budgeting process because it takes time, and they'd rather sort of be building their business or whatever that means to them. And it's the kind of thing that I always reflect and say, look, it's going to make the decision-making process for all the 1,000 little decisions you make throughout the course of the next 3, 6, 9 months that much easier, because you're going to go, can we spend on X conference or marketing plan? Can we buy this? Can we hire that person? If you've already made the budget, if you've already made a forecast, then you can just refer to that and go, yes, we can, or no, we can't. We have to wait for another couple of months or whatever. It's going to make things that much easier and save you a lot of time and make that decision-making process better. So I've said my piece, so I'll move to the next slide. And the other question that I got from a CEO was, should I even do this? Everything's changing right now. It's so uncertain. Can it be done? The little analogy for this maze, figuring out your way through the maze, it's an analogy I put on there for figuring out the forecast, the plan. But what if that maze changes every day? Can it be done? Can we properly forecast when everything's changing? I'll go to Evan first.
So this comes down to how well you know your business. You should be able to properly forecast your business. Otherwise, you might not be the right leader for it. Sorry to say it that way, but that's kind of the reality that you're going to get from people you're trying to get money from. You need to be able to understand how to answer all the different kinds of questions that are going to come at you based on them sort of trying to game out these different scenarios, as Ian had pointed out, walking through the maze. This is a great picture. And then, we'll talk about it more towards the end, but it's also knowing your audience of who you're talking to and how you're positioning different things in your forecast to the consumer, to the person. There's always subconscious bias based in these things. And really what the forecasting process does for you as a business leader is it helps you see blind spots and where that unconscious bias exists. And the process by which you go to other business leaders and management team members and tease out these different aspects of your business should be a learning experience for you and should make you a stronger business leader to lead that business into a positive outcome for all parties.
Blake or Helena, want to jump in on this one?
Well, I just wanted to add to that. I like the analogy of personal budgeting, right? And forecasting and all this stuff. Like a lot of what we do in our personal lives, we don't do in our business, or vice versa. And it can be helpful to look at a business the way you would a personal budget. And one of the problems with, I think, a lot of budgeting is that companies do it, or forecasting, right? They're linked. I think we should talk about that too.
Mm-hmm.
Is they do it one time a year and then they never really look at it until the next year. So
yeah,
that's like, if you did that personally, if you set a budget for your year and then you didn't look at it until the end of the year, do you think you're going to hit your budget? I don't think so.
What you're making me think of, Blake, is so how I do my personal budgeting is I use envelope budgeting, but I do it with banks. So I have 6 checking accounts, and each checking account is for a different purpose. So if I don't have money in my restaurant budget, I'm not going out to the restaurant, kind of thing. So yeah, different types of budgeting.
And I do this. I do a similar thing with a personal budgeting app, right? But it's based on the envelope method, and that really works for people. But I wouldn't say that that's great for every business. It works great for personal. But what I like about it is that because it's all in an app and I'm feeding in my transactions every day, I am looking at my budget every week or sometimes every day, and so I can really keep tabs on it. And so, like the analogy for a business is, you need to be looking at that budget every month and forecasting every month and reforecasting every month to really get value out of it. Otherwise, it's just sort of a pointless exercise to do it once a year.
Yeah.
Right.
Yeah, that makes sense. And what I like about what you're saying is that you're doing it often, and the more often you do it, the better you get at it.
And adjusting it, right?
And the better you're adjusting it, and then also you're using tools.
Yeah.
So in the simple case of the envelope, set aside a set of envelopes, use an app, use separate bank accounts, but you're using tools to make it easier for yourself.
Yeah.
So I think the answer is yes, it can be done. It can be done fast enough. You just have to get good at it, and you have to use the tools.
Yeah, it's like any other muscle you use in business, right?
Yeah.
Totally. If I could just add one point there too, I think
Sure.
it's really good distinction there that the personal budgeting and the business budgeting should be done in tandem for those business owners. So at the end of the day, we need to know, what does the business owner want to take out of the business, and what do they need to serve, to have a happy, comfortable life, and make sure that the business is going to provide that to them. Because too often we see business owners will go and create a budget for the business and completely forget about themselves and what they want to succeed, and haven't quite done the work to figure out what they need to back engineer out of the business in order to fulfill what they need for them and their family.
Right.
And then the other thing is, to your question on the last slide, Ian, I think right now there's definitely point in adjusting your budgets and doing your forecasting. I think right now a really helpful tool to help us kind of swim through the mess is the scenario analysis. So being able to look at a couple of different versions of how the truth might land, so that we can prepare for the best and the worst, essentially, right? Yeah. So if we look at if this happens, then what's going to happen, and how do I deal with that? If this happens, then how bad will it be? And I think just going through that exercise can alleviate a lot of stress on business owners than just sitting there at night worrying about how bad is bad going to be and what is this going to mean. They can actually look at how those numbers will land, and then be able to get into action sooner than later.
Mm-hmm. Mm-hmm. We've got so back of napkin math is a good place to start. So maybe Helena, you can sort of take a what does this mean when people say back of envelope or back of that? What are they really talking about?
Yeah, it's just a quick and dirty rundown of the high level numbers. Okay, so there, it's helpful. It's really helpful for maybe a first pass of a business idea, and will it be, does it make sense, or before we spend too much time and effort on building out a big model, or if something like right now we've got a pandemic and you want to just do a quick gut check, you need to make a quick decision, but you don't necessarily have maybe you don't have a budget in place and you don't have time to build that out. You can do a quick back of the napkin calculation, as they call it, just to get order of magnitude. It'll help you in a pinch really quickly when you haven't got the time, or maybe you don't have the skill set, but it's certainly not how you should be running your business on a regular basis. So it is a helpful, useful tool for a quick and dirty, but it is quick and a bit dirty.
So in the spirit of this discussion, and I'd like to maybe share a personal story on this one.
Yes, briefly. This is amazing.
Go for it.
And I have it. So the first company I raised money for, $1 million, Series Seed, and we raised it from somebody who was from the industry and had made some money and things, and it was sport for them, right? So it was, in a lot of these ways, when you raise money from, especially at the early stage on the story and the belief, a lot of it has to do with somebody who's just looking for sport and something, right? And before we went into a meeting in the morning over coffee, I mapped out basically all the months, and I don't know if you want to share my screen, my view, Ian, but there's my back of the envelope math. of the bank balance and how much I predicted to spend each month and how many months of runway, just so I could have something before I walked into the meeting and I could say, no, I knew what the numbers were and I was able to do it on the side to the point about napkin math. But at least then I had like some level of confidence. And I'll never forget showing this to the investor, like pulling it out and like looking at it. And Jim says, that's great that you did that, but it'd be really great to see like a balance sheet with the cash number kind of stretched out over the months. And I said, yeah, I'm trying to find some time to build out a full financial model, basically. And that was back in, oh gosh, I don't know, probably 2015. That was the first startup I raised money for, and I was the CFO for. So that company ultimately ended up getting acquired by SiriusXM Radio, which is kind of a fun story. But
yay!
We've all been there is kind of the point. And sometimes just doing the anecdotal thing like that is as powerful as doing the fully vetted out. But the fully vetted out allows for a communication plan to happen with other parties. Back of the napkin math just is kind of like a brainchild, if you will, of what you know.
Mm-hmm. A lot of people often then go to spreadsheets. So this is your slide, Helena. What's the problem with spreadsheets?
So
they're great. I love them. I did a lot of forecasting in spreadsheets, but what's the problem?
I love spreadsheets. I went to an Excel professional development course held by CPA Canada, I don't know, 8 years ago. And it was an advanced Excel course, and the lady presenting said, every single Excel model has at least one error in it. And I was like, that's not possible. Mine are beautiful and perfect. And she said, I put this out to you guys. Anybody can send me a model and we will find one error in it. And we always do. And I thought, this is crazy. I didn't actually send my model, but I really, that message really stuck with me. And one small formula can absolutely muck up the entire thing, making it completely useless. So the one issue with spreadsheets is that they're open to error, right? No matter how good you are at Excel. I used to calculate millions of dollars of bonuses in Excel, but there's always a chance of an error in there. So that's one issue. The second is it's really difficult to do three-way forecasting. So it's difficult without spending a lot of time to build this out, to be able to see the impact of one change on the P&L and how it's going to flow through to the balance sheet or to the cash flow. So being able to look at those three statements and how things are going to land is really tricky to do in Excel. It's totally possible. You're probably going to have some errors because you're getting more complicated. It's a very time consuming. It's also cumbersome from a presentation perspective. So you have to be able to, you've got different users. So you're going to have to take this model and have different presentation formats depending on the type of people that are looking at it. So some people who are going to want to go into the nitty gritty and see the actual formulas, and some people are going to want the high level, and it just gets, again, a little bit more cumbersome to work with. It's cumbersome getting those actuals in there and having the forecast update without having to do these. You're going to have to basically do big data dumps and make sure that you haven't messed up your data. And the last thing too is just the scenario analysis. You get all this data in there, you've got everything built out, say you've gone through all this effort. Now you want to do some sensitivity analysis to see, okay, what happens if it takes 6 months for us to open versus 3 months for us to open versus 18 months for us to open? It's a whole lot of work. So as much as I love spreadsheets, it's good for like maybe a quick and dirty, maybe back of the envelope 2.0. But essentially, it is very time consuming and very hard to do without errors.
Cool. We had a question from someone on the line. I think it was Janos, which ties perfectly to this point, which I think was Evan's. So budgeting is fine when you cruise and relatively easy to do. The challenge is coming when a startup starts from almost zero to a new service and scaling up more unknowns than knowns. And how do you plan for that? So, Evan, can you handle this question?
Yeah, I mean, stage of business is definitely going to inform how you approach your forecast. When you have more unknowns than knowns, absolutely, you're not going to be using what are called OKRs, objectives and key results. You don't know what your objectives are. In fact, you may not even have product market fit. So really what you have to ask yourself is, do I have enough cash in the bank to grow into the valuation that I raised the money on. And if you're self-funded, then what's your funding strategy for when you're done with your own money? And that's really what you're planning for. And so, do you have an investor who is independently wealthy and really interested in making a positive impact in the world and wants to, do you have a story that has a green play in it? These are kinds of more of the questions around that. When you're starting to put pen to paper, or using forecasting tools and things to do this, really accounting and all this forecasting stuff we're talking about is just a language of business. And so it's for somebody to read some numbers and gain an understanding of how you believe your business is going to play out and how you're trying to strategize it. That's it. So you build it in such a way that molds to however you're trying to position the company at that point based on those knowns and unknowns. Simple as that. And knowing your audience is going to be paramount. And anybody who at that stage of the company who's asking for something more than, say, 12 to 18 months is really just testing you out to see probably if you're like gonna try. It's like when you're, if I dare say, it's like when you're pulled over for drunk driving and they say, do you know your alphabet? Can you say it backwards? And you go, I couldn't even do that sober. Like, you're drunk. It's like the same kind of thing. It's like, can you tell us what 5 years looks like? But you have no product market fit. Like, no one knows the answer to that. Like, and if you do, call me. I'd like to maybe come work for you. But that's kind of how I deal with that, for sure.
Okay. Here's one thing that I just wanted to throw in the mix. It was about if there's more unknowns than knowns about your own business, look at other businesses and see what they were able to do. Now, these are some of the the darlings of tech, and they had a massive growth. So probably you're not going to follow that same growth curve as Slack, but just maybe take a look at what is possible, what can be done. And also, if there is an investor in play, what are their expectations, right? And then you can make sure that what you're projecting, at least for the top line, is reasonable compared with similar companies that have achieved in the past. So that if you're ever questioned on that, then you say, well, I don't have much to go on. I don't have a huge amount of history here, but I'm just sort of looking at what others have done and what is possible to inform the prediction.
Mm-hmm.
So what else? So I think, Helena, this was your slide, but I'd love Blake and Evan to jump in as well about how you think about different sorts of lines on the projection behave and how they relate to each other. Maybe talk us through some of your ideas on this.
For sure. I mean, a good place to start is your revenue. What you think you can hit is going to affect what you can afford, essentially. So it's good to look at, like Ian mentioned, benchmarking, see what's possible for others in your industry. How many sales are you going to have to hit? How many engagements are you going to have to hit in order to reach that number? And then back engineer out of that the expenses in order to achieve those. From a cash perspective, you need to look at, if you're an invoicing company, purchasing company, then you need to think about your AP and your AR and how that's going to affect your cash. That's really one of the biggest issues for businesses starting, is their cash flow. And a lot of it is tied to delays with AR mucking up their cash flow, and they're potentially making it difficult for them to make their payables, which can really mess up their vendor relationships. So just having some thought into how to best set yourself up for success when you start, but also you can improve these as you go, and you can go back and negotiate these after the fact. Look at any debt or equity events that you might want to endure during the year, and what the cost of those are going to be. Bearing in mind that if you are doing any raising, that's going to pull you away from the business. So how is that going to affect your sales? I think this is one thing that people often forget. Okay, and we're going to go raise now, and then we're going to go raise again in 6 months from now. And I say, okay, cool. How are you going to actually run your business while you're doing that? It is so time consuming, right? So depending on how many people your investors are meeting with and what they need and the due diligence and all that sort of jazz. It can be very time consuming and pull people away from the business. So you have to essentially make sure you've got someone to cover you, or expect that there will be a little bit of a dip. And then on your variable expenses, looking at, the correlation between the revenue and the expenses, like I mentioned. So how's that going to affect your expenses? And then your fixed expenses as well, in order to manage the business, payroll, rent, hydro, whatever else you have, AWS fees, and then any one-time expenses that you're anticipating for the year. So are we doing some leasehold improvements? Do we need to buy some equipment and what have you? And make sure you get all of that in there, at least in one of the cases, so that you can see the totality of all of the expenses for the year, and make sure that at the end of the day, your revenue projection makes sense for what you need to cover this year. Anything you guys would like to add?
Blake, I've done a good amount of talking.
Well, I wanted to go back to Janos's question about the, it was more of a statement about budgeting being more difficult to do when you're starting from scratch. And I think part of the reason that's difficult is because so much of this on this screen right here is completely unknown. Mm-hmm. or we don't have it actuals. And I'm actually pretty new to the world of forecasting, right? Coming from the public accounting side, I'm used to compiling the information and handing over a trial balance to the finance guys like Evan, who then go on and do the super cool fun stuff, right? And one thing that I have learned since coming to Jirav is that the way we do budgeting in most companies is completely backwards. That we budget based on our actuals when we should be budgeting based on a forecast, and our forecast should be from scratch. Right? It should be driver based. It should be zero based. Zero based budgeting is coming back into fashion again, right? Every time there's a downturn, because the way we do budgeting, where we just say, let's grow revenue 10% and let's cut costs by 3%, is lazy, right? It's totally lazy.
Well,
and
you have to justify the cut versus justify the spend. It's just a totally different paradigm shift.
Right.
And having worked in big enterprise environments that did budget that way, it's a culture killer, because you'll accidentally cut areas that don't make sense.
Yep.
Like, let's just cut across the board on labor, and then we don't have enough people to do the work that we need to do in order to actually build a business.
Right. Yeah. So that's why, and Evan, I think, is going to show us a little bit of, how you can build a forecast from scratch using a model, a financial model. Yeah. And I think that'll, really be helpful in this. And it allows you to, especially with variable expenses, figure that out in a way that you just cannot do any other way. Mm-hmm. Right. Because you have to create a revenue model. And we can kind of do that. We know, all right, here's what our product is going to cost, and here's, how many customers we're going to get, how many orders we're going to do. We can all do that with the back of the envelope calculation, but then trying to figure out the variable expenses as we grow is really challenging. Mm-hmm. And a model is really essential.
Well, yeah, let me just explore that a little bit more, because what we're really talking about here is working capital, right? And the cash cycle. And what a forecast really allows you to do is predict, by sketching out your balance sheet every single month into the future for however many months, allows for you to see the effect on cash over time. There are definitely some calculations you can perform to do cash flow break even using unit economics and things, and there's some models around that, but it requires a level of, it might require a level of concrete evidence that's beyond understanding at the early stages. Another way of saying, your month 1 through 6 of cost of goods sold is likely not going to be the month 7 through 12 cost of goods sold, and not going to be the same 13 through and so on. Mm-hmm. And so you're going to want to, bake into your forecast these opportunities and things, and your pricing strategy might change, and a whole bunch of things might change into the future. Just because you're in this thing for the next 6 or 12 months doesn't mean that on month 24 your margins don't double. And so one of the ways to increase revenue is to double price or lower your cost. That's definitely one way to get to a more profitable state. So, going back to the economics conversation around elasticity of demand and things like that, it's those kinds of conversations, right? But it's definitely like a framework to put it in. But yeah.
Okay, well, why don't we, I'll skip ahead a little bit. This is about three-way forecasting and just how it all has to fit together, and it's hard to do unless you have a tool. And we talked about some of these things as well. So how to predict the future. So it's going to be a mix of all this stuff together. And that's where some experience in doing this stuff fits in. So we're running a little short of time, and I want to give Evan the floor so you can show us a little bit practically how this works.
Yeah.
But before I get there, this is the shameless plug for CFO services, Ontraflow, and companies like Ontraflow. There are people out there who are good at this stuff, and you can get help from. To put all this stuff together, using the tools, using past experience, who will know the answers to some of these questions. What's a typical blah-de-blah for this kind of company, just based on experience, to help get things going, and know how to build forecasts, or at least a model that you can work with. So shameless plug for us and people like us. And then the other thing is to use tools. So we're going to show Jirav today. There's also some tools that we use for shorter term, like really short term. It's in the next, on the order of days and weeks. What happens if I pay this vendor a little bit later?
And that's just cash flow
that kind of
forecasting, not the full
Just-
three-way. Yeah.
Just cash flow. So think of order of time horizon here. What we're going to be talking about is more in the order of months and years, and so that's important to keep in mind. Here's our free cash flow tool. It is for that short order of time thing. If you missed it on a previous chat, you can get the link to the spreadsheet here. I'll paste that into the chat, and you could do some short-term cash flow forecasting there. But let's get to Evan. If you want to share your screen,
Sure.
show us what Jirav looks like and how we
Yeah.
can do forecasting in Jirav.
So I'd like to qualify this. This is a financial model I'm building as a practice scenario for we are having a webinar on an end-to-end SaaS model, financial model build, and so it's not all the way done, but it's done enough to show some cool stuff. So,
Okay.
For the audience who has not seen Jirav, Jirav does financial reporting, planning, and analysis. So we have a dashboard visualization with these tiles that are pliable and show some financial metrics. And then we have reports, which is what you would expect to see in reports with different, numbers by accounts and things. And you can see we're connected to an actual set of books here. So this is actually connected to a Xero account. So it's a direct mirror of that account. And then here I'm projecting the future. You can see I've got some wages that are coming into the forecast, and I've got some revenues as well. And so all of this forecast is built up in the plans section of our tool, which is broken down into the different areas of your financial statement. So you can see we've got revenue through COGS, staffing, operating expenses, then your balance sheet sections, and then some custom stuff, which is where we're going to focus a little bit of time today. And then drivers, which is sort of like a global assumptions. It's where formulas and things live. And then you can do different scenarios. So if you were to, once you get your base case budget, you can come in and you can clone these things and create different scenarios and whatnot. It's as simple as changing dates and things around. And this is like exporting out of your current accounting system today, putting it into an Excel sheet, and then building up your model. We've taken care of all that overhead for you here in this tool. So real quick time to value. So what I've done here in this model, this is a SaaS model. This can be a software subscription. Let's call it like a health app. Like say it's an in-home health app that's $100 a month for the subscription. I think these are highly popular in today's market, given everybody's home during COVID and trying to do something to keep themselves occupied. And so if I come in here to my custom section, you can see I've got built up all these custom tables that include SaaS metrics and a sales funnel. And so SaaS metrics is something that is obviously going to be pertinent to those who are doing a SaaS business model. But those who aren't doing a SaaS business model, I would challenge you in thinking of ways that are unique to your business that could turn it into a SaaS business model. If you look at like the iPhone, Apple has basically successfully converted the hardware sale of an iPhone to a subscription model with their upgrade program and the warranties and things that they provide along with that. So people just consistently upgrade over and over year, and they're able to predict their business probably a lot better. So coming into this and looking at this a little bit more detail, you can see I've got revenue at the top, and this will change based on some of the things that we're going to change down below. And then I've got some calculations that are just built in. So we're getting some new customers from Sales Funnel. You can see that my April number of 40 agrees to my Sales Funnel down here below. And then when I go up to 42 in July, so these are related to each other, and I've built in all this logic. And if, tomorrow on our webinar, I'm going to build the whole thing from scratch so you can see it end to end. And then I've got some key assumptions that I want to just think about in my business. So churn is a very important thing to pay attention to in your business, and we'll change this and we'll show the impacts of that. And then we calculate what our churn customers are, and then like net new customers, and then a cumulative customer here. And then I've got my average revenue per user per month, or per customer basically. And I'm just assuming it's $100 a month for this health and fitness app for in-home exercise. And then I calculate out the average customer lifetime. This is just a 1 divided by churn rate. That's a common SaaS metric that is used. And then I just assume it costs about $40 a month to serve, with server costs and all the other related costs associated just to that one customer. That might be a little high, so we might want to think about decreasing this over time when we get economies of scale built into the business. And then I get to my lifetime value of the customer, which is a very important thing to look at because we need to make sure it's greater than my CAC. And so what we're gonna do here right now is I'm gonna go through. I'm gonna add in some marketing spend, and we're gonna change around some things here so you can kind of see this. Ian or anybody else on the panel want to add anything here?
Sure, let's add some marketing spend. I always like people spending on marketing.
So let's put like 250,000 in for the first 4 months of our business and see what happens. So if I just so we're going to spend $1 million over 4 months. And right now we're ending with cumulative customers of just under 130. So let's see what happens when I say save. And so now my cumulative customers are more like 766. And so the way that that's happening is you can see here my website traffic visitors have gone up to almost 6,000 a month. And that's because I assume there's a PPC count for pay per click, Google AdWords. I'm assuming it costs me $50. So here's a formula for the group. So I'm taking my marketing spend, I'm dividing it by 50. I'm just assuming that that's my PPC for the AdWords that I'm going to buy. So then that results in an additional 5,000 people visiting my website. And then I assume further that I'm going to get a 20% conversion to trials. And of those trials, 20% is going to go further down. So that gets us down into this new closed deals. And you can see all these blue cells I can sort of tinker and tailor with. So I can say, what if I actually do like a promotion that gets me, more like 35% in this period? I do some nice promotional deals. So I'm going to do a promotion that goes with that. We're ending now at 766.79 with so say save. So now I'm ending with like 1,300. So that's pretty good, right? And so I can see my revenues just going on and on. I still need to build out the revenue all the way, but so you can see, we're impacting this model based on these SaaS metrics that I've built out this logic into this table here. So how do I pull this all back into my model? Well, you can see here in my revenue section, I've got my subscriptions right here, and this is just taking my subscription revenue and multiplying the two metrics against each other. So I'm taking my cumulative customers and I'm multiplying it by my average revenue per customer. And so that's just giving me a simple projection into the future. And, that's a subscription business model. You get your last month and your current month sales, and you just keep recurring it over and over again. If we go back here to custom real quick, we can see if we're right side up. So based on the current metrics, we're losing money on our customers. We need some improvements in our business model. And this is the key thing to sort of begin to look at based on things. So, okay, so what if we're able to cut out some support or something like this? And I would, depending on your stage of business and things, this is one of those numbers that is very speculative in nature in the beginning of a business. So what if we were to say this is, negative 25 instead of 40? I'll just go to there for now, hit save. And so now, okay, so even getting it down into close to half, we're still kind of upside down in the business. And so these are important things to know about your business. Maybe our pay per click is too high or something. Now you're starting to tune in to what is happening in your business to really understand what's going on. Maybe our price is too low. If we were to up the price to 125 and put this out into the distance and save. Now we're right side up. And you can, so kind of the point here is now we're manipulating it. Now, this is all great from a revenue point of view, but what does it mean on staff, right? What does this mean on the rest of the business? Well, I can come into Jirav here and I can create a driver. This is a whole bunch of drivers here. There's all kinds of sections of your financial statements you can see. And I can add in a role. Right now in the model, I just have built travel and non-travel, so we'll call it a non-travel role. We'll say this is a 50,000 earner, and I'm now just gonna. So now I've defined that this is the person who I'm gonna hire. But what am I gonna hire them off of? Well, let's just say that for every 250 customers, I'm going to need to hire a headcount. So I'll go and I'm going to reference that custom table. This is the bread, and I'm kind of going fast for the group so I don't want to use too much time. But think about Jirav as removing all the overhead around syntax. Creating the dollar signs and all the formulas in Excel, and simply just pointing at the information you're interested in bringing into the formula, and then the software deals with all the math for you. So we'll go ahead and go into my cumulative customers. Okay, I can see here, right away I'm going to hire somebody, and then here I'll have 4 people, and it's going to grow. And then the role is going to be unassigned travel. And so now if I go back to my reports, I can see that my compensation is greater than what we were starting with before. And I can go into my staffing section, and I can see that I am in fact hiring all kinds of staff. So I can see 16. Here's where's my driver? The fun of always doing stuff live, right, Ian? In a model.
Right. That's good. We get the idea.
Yeah. Yep.
So what I think would be nice to talk about next, and we had some slides for this, but since we're right in here, it would be good to talk about presentation. So, yep. We build all this complex forecast and we have it hanging together right in our plan. But then, how should we best think about presenting that to whoever wants to watch it or look at it?
Yeah. So I'm going to use a quote from Michael J. Doty, the first CFO who kind of taught me how to be a CFO. You got to explain it in squirrel language, is what he would say. It's got to be you got to explain it in squirrel language. Meaning it's got to be something that's understandable to the layman, right? So you don't want to overcomplicate your presentation with too much accounting and finance jargon. I mean, and even people who are accounting and finance enthusiasts appreciate simplicity in presentation. And so, you're gonna want to have a visualization for sure, because people like to see graphics. It just connects with individuals of your key metrics, and they're gonna want to see, dependent on the type of metric. But you can see here out of the box, Jirav comes with some just high level financial statement metrics. But then you're also going to want to attach what we call an executive summary, where you have your section that has some cash, maybe some additional information around lifetime value of your customer, total customers, some real high level metrics of the business, and then a detailed P&L down below, so that people can see what's going on in the business, and then maybe a headcount chart at the bottom that shows how many people you're how many people are feeding off this business basically is, kind of like the way to think, maybe a different way to think about that. But, and then what this section up here allows for you to do above the income statement is call out those KPIs. So cash is obviously a KPI. Change in cash is a KPI for sure. This is probably our marketing spend that's causing this here. And that's how I present it. Ian, what would you add to that?
Just more KPIs, I think. So if there are certain KPIs that are crucial to your business, so that CAC versus lifetime value ratio. If you're a SaaS-based business, that's a great one. The churn rate, or what that is, maybe make sure that that's in there. These kinds of things, I think, having highlighted in there. There was a point that Blake made for me when we were preparing for this presentation was, don't have them separate. Don't have your actuals and your forecast separate. But as you've got here, show, well, probably more time period than this, but show, here's the last little bit of what we just did, and here's how it leads into the future. So don't have them as two separate pages. It makes it hard for people to see.
Yeah.
Yeah.
Helena, you got anything else?
Yeah, I agree. It makes it so much easier for people to kind of track it. Also, it's probably a good point to bring up Dave's points that he asked in the Q&A earlier today. He said, what are the typical numbers for SaaS forecasts? And he mentioned a couple of KPIs that might be worth chatting about. So an appropriate growth rate, revenue per employee, R&D headcount versus G&A versus sales and marketing, gross margins over the first 3 years, net margins, break even after launch. These are all really good KPIs to track. I'm just wondering if anybody has any insight on some typical benchmarks for SaaS companies in those areas.
I would think the number one that I've seen from sophisticated investors around SaaS is going to be CAGR, cumulative annual growth rate, is a big one, which is growing off of that growth rate there. Mm-hmm. Break even date after launch is really just, to me, a proof point of that you can get to profitability, and you have line of sight on profitability. And then the breakout between the departments and things is definitely going to be important because it shows whether you're investing into continued product development or if you're making bets on sales and marketing. So those are great ones. But CAGR, I think, would be the one that I would add into there for sure.
Cool. Yeah, it's always a fine balance to show investment in development and investment in actually selling the product. I find that companies generally have a little bit of trouble balancing those two.
Yep. Yeah, good question. I mean, good comments there, for sure.
For sure. And Dave, if you want specifics about your business, it's going to depend on industry and exactly what you're doing. Enterprise versus B2C versus small business SaaS. They're going to be different. But we can follow up after on that if you'd like. All right, we just talked about this slide, how to present a forecast. I think we covered all those except, collapse unnecessary rows. So nobody likes to see a huge eye chart of things. Focus on what's important. And we showed some of these screenshots. So if there are any other questions, we're coming up to the top of the hour. So by all means, type into the chat if you've got another question that you want to ask. And I'll just go through a couple of closing slides while we do that. So we've got some other events coming up. So tomorrow.
Uh-oh. Did Ian go out, or is that me?
Yeah, I think Ian did the same thing I did. Can you guys hear me okay?
Oh, that's so strange. Yeah, we lost Ian.
Ian, we can't hear you. I don't think you can hear us either. I'll see. It's like dubbing. Anyhow, I'm doing I'm sitting in on the Women's Pitch Canada, the Volition event.
That's great.
On the 30th. And so thank you, Ian, for dragging the cursor there. So that's a women's pitch night. It should be pretty exciting. It's all across Canada, which is a cool outcome of the pandemic, as Volition has gone online with their pitch night. So that's pretty cool. And there is a Small Business BC event happening on Thursday as well. You can see the dates there. And Evan, do you want to speak to, Ian's still going, this is hilarious. Evan, do you want to speak to your webinar that you're doing tomorrow?
Sure. I'm going to have a cup of water, coffee, and towel because I'm going to try to build an entire financial model in 90 minutes. We're going to get in by this, we're just barely going to make it, Blake, I think.
Evan's going to be sweating and I'm just going to be relaxing because I don't really have to do much, very few slides. It's going to be
Love this.
really exciting. And it's going to be recorded. So if you want to see how to build a model from scratch, register, attend if you can. It's at 10 a.m. Pacific tomorrow. If you cannot, you'll get the recording sent to you, and it's a great educational walkthrough. I mean, you're not going to get this anywhere else.
Yeah. Sure. So the slide, as per usual, I'm not sure if Ian's back with us or not, if he's still talking to himself, but the slides will be posted on our website under our events. We'll throw in there a quick summary of what we talked about today and some resources. And I guess, Evan and Blake, if you have any other great resources that you think would be helpful for people, feel free to send them over. We'll post them. There was the zero-based budgeting link that we've posted here. We'll have that there as well. It's probably helpful for people. And thanks again for joining. Any closing remarks?
I would just like to say, if you're interested in learning more about Jirav, head over to our website, jirav.com. We've got demos. You can request a demo. And in the upper right, there's also a start free trial button. You can actually, unlike a lot of enterprise software, you can actually try Jirav yourself. All the planning functionality is there. We just released that. Very exciting. You get a 14-day free trial. So connect your QuickBooks Zero, NetSuite, Intact account and have fun.
And I'll just plug Ontraflow for themselves. Ian started out saying he hasn't done a lot of financial forecasting and things, but I've worked with a lot of customers, and I can say Ian and Helena definitely know what they're doing. So you've got a great resource out there in Canada, and we appreciate joining in with you guys here today. So
great stuff. Well, thank you. And thanks so much for joining us. And thank you to everyone online as well and on Facebook Live. Thank you so much for joining. You can always feel free to reach out to any of us if you have any questions. We're here to help navigate this fun world. And thank you for those who also shared some questions and some comments along the way. Really appreciate your participation. So we are going to be taking a break for next week. Our whole office is closing up for a holiday.
Wow.
So we won't have a quarantine chat next week. We'll be hanging out wine touring, some of us, and we will be back the week of July 6th. So I think it's on July 7th. So we'll meet you all back then, and have a lovely rest of your week. Thank you so much.
thank you. Bye.
Thanks. Bye.
Bye.
Bye-bye.